There's an age-old maxim in the life insurance business. Life insurance is sold, not bought. While that may still be true to a degree, times are changing in terms of attitudes about life insurance and distribution methods. I'm John Weber for Best Review Magazine, and I'm speaking today to Neil Sprackling, CEO, Life Health Reinsurance US, Swiss Re. Neil, so glad you could join us today.
Yeah, really pleased to be with you, John.
Neil, you have a unique perspective for the life insurance landscape. Can you start by sharing some key trends and innovations you and your team are focused on?
Sure, John. Yeah, so it's a very interesting time in the industry at the moment. Let me just share a few perspectives and then give you some sort of examples of places where we're spending our time. Firstly, one of the key trends we see this year has been and through last year actually, has been the shift in sales. So we're seeing a real uptick in sales of annuity products, and which is a good thing for the industry, good thing for the consumer, coming off the back of interest rates at very healthy levels. The flip side to it is we've seen a little bit of a sort of a flattening and almost decrease in the sales of traditional life insurance products. So my point here, and where we're trying to spend some time, is not forgetting these infamous protection and retirement gaps. So annuity sales do a great job for helping close that gap on the retirement side. They're a great vehicle for helping people plan out their retirement. But let's not forget that we've had for a couple of decades now quite a significant protection gap, so a level of underinsurance in the market. And so as we came out of the pandemic, where we saw life insurance sales actually rocket to sort of very high levels that we hadn't seen in 20 plus years, they've now plateaued a bit. So we've got to try and just jolt that kind of consumer lethargy, as I call it, to make sure that people don't forget about the importance of all the products that we sell from an insurance sector. So that's first thing I would say, John. Second thing, where the team is spending some time and we're looking at closely is what we'll call mortality trends. So what are we seeing as we've emerged from the pandemic in terms of excess deaths? Third area of focus continues to be improvements in the way that we underwrite risk, and in particular, accelerated underwriting. So that's all around using data analytics, improving the efficiency of the process, and making the experience better for the end consumer. And then the last area I would just share with you is what I'll broadly call digital distribution and product innovation. And really our focus here is on those underserved segments that I was talking about with the protection gap. So the people that who've got too little or no level of insurance cover and don't have easy access to the products that we sell. So those are the key things that we're focused on at the moment, John.
What mortality trends are relevant to the life insurers, and does the Swiss Re team expect excess mortality to increase or decrease anytime soon?
Yeah, so this is a great question. So inevitably through the pandemic, we saw quite high levels of excess mortality. If we look back into 2023, when you could argue we were largely coming out of the worst stages of the pandemic, we still saw that excess mortality at around 4%. So it's quite elevated compared to the norm where we were at back in 2019. So as we move into this year, that has started to trend down, which is a good thing. We should all be positive about that, right? Less people, dying than we'd seen through the pandemic period. But there is still a lingering effect, right? So even in the early months this year, it was still trending between the 2% and 3%. We expect that to come down over the course of this year and into the subsequent years to around 2% on average. And actually, that is very consistent with a study that was done by the Society of Actuaries last year that was saying that they expect the excess mortality to continue at about the 2% level right through to 2030. So, John, it's still there, right? We've got to pay attention to this, and we've got to understand what the sort of drivers are and some of the causes that are leading to this excess mortality.
Now, research has indicated that P&C insurance claims costs are increasing faster than the average rate of economic inflation. It's a phenomenon known as social inflation. Have you noticed this in life insurance? And if so, how do you deal with it, Neil?
Yeah, John, this is a really interesting question, right? Because this topic tends to come up much more on the property casualty side, particularly casualty. We talk about social inflation and the increasing costs of litigation and lawsuits that are taken out. And we don't often think about it in the context of life insurance. But this is something we've been looking at over the last 6 months or so, and we do see an increasing trend for life insurance companies to settle cases actually before they get to the litigation point. And our data actually and analysis would suggest that somewhere around 55% of cases are settled where in fact there are strong grounds for denial of the actual claim. Right. So why is this happening? I think this is ultimately a function of what I'll call the unpredictability of court verdicts. So in that level of uncertainty, what is the better outcome? Maybe it's to settle, then go through. The second piece of example I give you is just reducing the time and the cost of that litigation. These can be very long, drawn out processes. So it's a trend that we see increasing. It is not at the levels that we see on the property casualty side, but it is something that we're saying to the industry, pay attention to this. And there are a few recommendations that we would, that come with that. Firstly, monitor closely the cases that are potentially going into litigation, and spend time looking at how you can improve claims processes, which actually help consumer understanding and clarity of the underlying products, right? Which often, lead to some of these cases where you've got, cases being denied by the insurers. I think the other part of it is engage local experts, partners like reinsurers. We have a vested interest in these cases as well as a main player in the life insurance industry. And the other part I would say is participate in industry associations. The International Claims Association is a good example. LIMRA has a venture with an organization called Spark Institute, which looks at fraud in life insurance. So all these factors just say to everybody, this is not at the level it is on the P&C side, but pay attention to it because we've seen an increasing trend.
Neil, what would you say is Swiss Re's value proposition in the life and health reinsurance space?
So, John, it's interesting, right? So we actually have a value proposition that sits across all lines of business that we write, and that's what we call making the world more resilient, right? People often associate it more clearly on the property casualty side when you see large natural catastrophic events. But we had our own situation through the pandemic, right? So with COVID, right? And that, in a sense, for the life insurance industry and an organization like Swiss Re, is about making the world more resilient, making sure that we're there to pay out on the promises that we made to the insurers and then obviously to the end consumer. I do think that it's, from a life insurance point of view, think about us as an extension of the life insurance companies. Our value proposition isn't any different, right? We're there to stand behind those companies and to make those commitments and pay the claims as and when they become due.
Neil, so glad you could speak with us today.
That's fine, John. A pleasure to be with you as always.
That was Neil Sprackling, CEO, Life and Health Reinsurance US Swiss Re. And I'm John Weber for Best Review Mag.